Possibly. Maybe. We'll see. Okay, now 15 minutes in. Let's finish what we're doing. All right, so beacon signals company. In case you fell asleep, we're on page 13. So what we show for our date?
For the year ended December 31st.
That's right. For the year ended Ian's doing something strange. December 31, 2019. Okay, so what goes first on our income statement?
Revenue.
Revenue, which is what?
Revenue.
Well,
Because there's two different ones. Revenue.
yeah, in the book, they don't actually have this heading, but I'm using it because that's what I've done in the past. So you can use it or not. I mean, if you didn't have it on a test, I'm not going to count all for it. Fees earned and rent revenue. So those amounts will go here, and then you'll total them. So we got 401(k) and 1,300. So how much is my total revenue? And they got the heading called revenues.
4025.
4025. Again, I'm not going to split hairs over whether something has an S on the end of it or not. Okay, so the next thing we're going to do is expenses. All right, so yeah, there's a whole lot of them. Are they in the right order?
Yes.
Which is nice and handy. So all we have to do is just list these things. I'm probably going to list all my names and then go back and fill my numbers in. Salaries and wages expense. Advertising expense. Utilities expense. Depreciation expense building. Again, if this was my financial statements I was doing, I would probably just have one depreciation expense account instead of multiple, but that's a matter of opinion. Repairs expense. Depreciation expense of equipment. Insurance expense. Supplies expense. Miscellaneous expense. And then just fill your amounts in. So we'll have 168,000, 21,700, 11,400, 900, 8,850, 4,500. Oops. $3,000, 2,250, and 4,350. Okay. So what are my total expenses? On my back. 233,050. Okay, so just taking a look at it, do we have net income or net loss?
Find that income.
We have net income. So first, let's put our total expenses label on here. And then we'll show our net income. How much is it?
169,450.
169,450?
Yeah.
All right. So on to the statement of owner's equity. Beacon Signals Company. And they kindly put our name on there for us. So what's my date gonna look like?
For the year ended.
For the year ended December 31, 2019. Okay, so the first thing we're gonna have on there is beginning capital. All right, I'm gonna go back and look at the instructions for a second, because there's some information over here that we might need. All right, so our first instruction was to prepare the income statement. We've done that. The second one is to prepare a statement of owner's equity for the year ended December 31. No additional investments were made during the year. So that tells me that this company was already in business since there were no investments made. So our owner on line 20 of our worksheet, her name is Sarah Colon. So we'll have her capital as of January 1. So we're just going to use that number that's on there, 238.1. Okay, typically we would put owner investments next, but they told us there weren't any. If you need to write owner investments with a 0 just to keep your mind straight on what goes next, that's cool. I don't care. But you don't have to. So the next thing we would list would be net income. So our net income was 169,450. So we'll put 169,450. And then what's next?
Owner withdrawals.
Owner withdrawals. And how much is that?
10,000.
And that comes off this worksheet. Sarah Colon drawing is 10,000. So we'll show our parentheses with 10,000. And that's all we've got to, that's the only changes to net equity during the year. So the only changes to owner's equity during the year. So what is the net of those two numbers? That one's easy. You can do that one in your head. So what am I going to call that?
An increase in owner's equity.
An increase in owner's equity. If it was a negative number, we would call it a decrease in owner's equity. Because net income is going to increase owner's equity. Withdrawals decrease it. So if you have more net income than you have withdrawals, then you're going to have a net increase to owner's equity. So add the two together, and that will give us her equity at the end of the year. Okay, so what is my equity at the end of the year?
397,550.
Okay, so that's my ending capital. I have to just cross right through it. And we'll need that number for our balance sheet. So were y'all here when we did the classified balance sheet stuff? Or were y'all, was that Monday? I think it was last week. Okay, let's do our balance sheet. Again, we're gonna put the company name up here, Beacon Signals Company. And what kind of date format are we using? Okay. Again, we've got 3 columns. Don't get too upset if you can't remember which column what thing goes in, because it can get confusing. So there's a method to the madness, but it still can get confusing, especially when you haven't done it but a few times. All right, so our assets will be first. You don't have to put this in the middle. You can put it to the left if you want to. I just feel like there's so much on there, it kind of keeps it neater, but that's just my preference. All right, we're going to list our current assets first. So what makes an asset current?
I don't know the definition.
But look at
I
you.
just know what they are. I don't know what that is.
Well, what makes it current?
You can sell it or use it for
Yeah, but what's the limit? What's the limit that keeps it current?
a year.
Year. Yeah. So if you can use it in a year or less, or if it's cash, it's going to be current. So we're going to list these in the same order we would have if we hadn't started using the category current assets. It's still the same idea. So you're going to always start with cash. Accounts receivable will be next. Prepaid, insurance, and then supplies. They have been very helpful to list these things in the order we need them in. So that's kind of a no-brainer if you're trying to struggle with which column to put stuff in. All right, so we're going to use the middle column. The only time you're going to use this inside column is when we do our fixed assets with depreciation. If we have things that we have to add together to get a total, we're going to use the middle. So cash is $13,000. Receivables $53,000. Prepaid insurance is $1,200. And supplies $750. So that's all my current assets, because land falls into property, plant, equipment. So how much do I have for my total current assets? Don't worry about all this staggering either. I mean, it's good if you can, but
67.
to be honest, I could probably turn these in to one of the partners that I used to work with, and they go, "You need to tab over 2 more spaces on this line." It's real pain in my butt.
I mean, the numbers are on there, so.
Oh, girl. You just don't know. I mean, accountants kind of typically have a bad stereotype anyways, being nerdy in particular, but I knew a few of them that fit the mold. I told you there was one that all he was missing was the pocket protector. And maybe the little green visor thing.
White shirt.
Oh, he had the white shirt on.
Oh my God.
My boss was so serious. Now, he wasn't quite that nerdy. He would, but he was a tax accountant. That was the difference. He was so all business. He would wear these starched white shirts and they would never wrinkle. We didn't think he moved. We never saw him eat. We thought he was a machine. He pretty much was a machine. We saw him eat crackers. He'd eat saltines. That's all I ever saw him eat. Well, they are good, but I don't know. He'd sit down, but he would never wrinkle. It was the funniest thing. I was like, I joke around a lot, and he's like, it took him months to get used to my personality. He would just stare at me, and I was like, okay, I'm leaving. See ya. I'd go back, I was like, he hates me. All right, so property, plant, and equipment is our next section. I just don't believe you can always be so serious. It's too stressful and it's bad for your health. He just was super serious. He was an A-type personality, but I mean, once he finally got used to it, I guess he wasn't sure if I was kidding. He didn't know me well enough to, but once he got used to my personality, he would joke around with me. He was just very,
Oh no, Dad works with a bunch of those people. Oh my God.
I like some engineers are like that too. All right, so the first thing they have got listed that we can put in property, plant, and equipment is what?
Land.
Land. Okay, so we're gonna use this middle column for land. And we're gonna put the things with accumulated depreciation here and bring the book value over, the net of the two. All right, so our first one is building. And then underneath it, we have accumulated depreciation building.
So we put accumulated depreciation. Let's see the number.
Yes, because you are subtracting it. All right, so our building is 500,000. Our accumulated depreciation building is 264,300. So on the same line here, you'll put the net of the two. What's the net of these two? Meaning subtract one from the other and what we have left.
235,700.
235,700. Now, what is this number? What would we call that number?
Book value.
Book value. Cost minus accumulated depreciation is book value. You could also say it's the undepreciated cost. Okay. Equipment. Too bad I can't copy and paste. Y'all only have to write this one time. I have to write it 3. So when you're like thinking, God, this is a lot to write. Yeah. Okay. So equipment is 121,900. Accumulated depreciation equipment is 104,600. So what is my book value?
17,300.
17,300. Now, is that all my property, plant, and equipment items? Yes. So we're going to add up this, this, and this. And we're going to put our total out here, which will be our total property, plant, and equipment. What we got?
Oh, 351,000.
351? Okay, so that's all of my assets. So if I add 67,950 and 351,000 together, what do I get?
418.
Okay. So 418,950 is my total assets. What? What you doing? She was your mom. It's just writing notes. It's just writing notes. That's my dog, baby. Huh? What'd you say? What'd you say? Oh, bye. Lord help me. That's my number one child in age. There's no number one, they're equal, right?
There's definitely a number one.
Okay.
They're so different. I don't know.
I always know there's a number one.
If I could combine them together into one human being, they'd make the perfect, like they'd be like a superhuman. Because they are so opposite that his strengths are her weaknesses, her strengths are his weaknesses. So they would be like a complete human. Huh?
With different qualities, each person's number one is so important.
Oh yeah. Well, they're number one in their own way.
No, my sister is definitely number one.
In whose eyes?
No, I was the first child to come. She definitely was my.
You know, I thought the same thing growing up because my brother got all the attention, but it was because he was so rotten. I got away with all kinds of stuff because they weren't watching me. They were
Oh,
watching
no,
him.
my sister was much better person. That's why my mom.
I'm my dad's favorite. I don't know. My mom loves us both. They both love him. He's just.
Then my brother, my youngest brother.
Well, part of it's just because there's such a huge age gap. There's 11 and 13 years between my siblings, and they expect me to do all this crazy great stuff or whatever. But then they get away with anything that they want, you know?
Yeah.
So my parents were like, okay, well, you're gonna do this, this, and this with your life, and all that crap.
I think the vending machines are screwed up still, I guess. She's cursing them. All right. Yeah, do we need to have a therapy session?
That's
That's
why
okay.
I hang out in class.
Huh?
That's why I hang out in class, because it is kind of therapy.
Your parents just love you differently. It may seem like they love one more than the other, but they don't really love you. They do. But if you like, if you're rotten and you get in trouble more, it will seem like they don't like you as much, but they do love you.
Oh, they definitely don't like me.
Well, that's not a requirement.
The
But
people watching this are probably like, what?
oh, that's true. I forgot we were live streaming. It's therapy. Talking about being kids.
Look, it's free.
It's true. It is free. Look, I've had so much therapy. I can, you know, we could run a session in here. All right, liabilities.
All caps.
Yeah, that's just me. You don't have to. Current liabilities will be, what is next?
We don't have any long-term.
No, we don't have any long-term ones on there. I don't think we've had any long-term ones yet.
Okay, so for the sake of our nose and the pain in my hand, so are we allowed to abbreviate really, really long stuff in our nose?
You can in your notes. Just remember when you actually do a financial statement, like on a test or something, don't abbreviate. I don't care. You know, you can do whatever you want to in your notes. They're your notes. Right. They're your notes. You do as you please. We have salaries and wages payable, and we have unearned rent.
Yeah. No, accounts payable.
Oh my god.
She's killing me.
Hey, by the way, mom texted me the fix for your keyboard.
I'm good.
Just so you know.
We'll have to do that when we get through.
It's an extension you have to download for the notes.
Yeah, it was working fine a minute ago. I think that update did something. All right, so salaries and wages payable and unearned rent. We're gonna run out of time to finish this thing. Y'all don't care, do you? Okay, so this will be my total current liability. So we'll put our numbers over there and add them up. Okay, so I have for accounts payable, 15,700. $4,900 for salaries and wages. I'm getting tickled to her. She sounded, y'all, even though you get grown, she's 21, and sometimes she just is reduced to like a child. I just want some grape juice. Yeah, sometimes you just get no pity from me. It's just the way it is. Okay, so what's my total for my current liabilities?
Wait. 20,000? It's 20,000.
20,000 what? 400?
Yes.
Okay. Nope, we don't want to do that yet. Come on. Okay. So the next thing we're going to have, since we don't have,
21,000. Sorry,
how much?
I'm tired. It's
21?
21,000. I was looking at it.
Well, you're fired.
Like it feels like money.
All right. So the next section is owner's equity. If you can't get it right, you can't be calling out answers anymore. I'm just kidding.
Then I can just follow.
But you're just like you're going along.
I know. I'm putting, look, I don't have the totals. I'm just, you know, this is up to y'all to come up with. All right. So we have Sarah Colon Capital.
So we don't have to go like through liabilities if we don't have long-term. We can
Yes, yes. Well, no, we don't. That's right. I forgot about that. Sorry. No, that's fine because all we have is current liabilities. So really that is our total. You could put total liabilities, but I mean, it's just not necessary.
So I don't have blackouts, so if we go back and stuff, it's-
Pencil. Are you using a pencil?
I don't have a pencil. All of that pencil. I've used all the lead in my pencils in this class, so I'm kind of out right now.
I'm pretty sure the bookstore has some. You need to get one of those click erasers too for when you have to erase. They are awesome. And they don't tear your paper up. Or one of the big white ones. Okay, Sarah Cohen Capital, how much was that?
Okay. $397.
I'll look at the wrong one, I'm sorry.
$397,550?
Yes.
All right, so we'll put that here and add those two together. What do we get when we add these two together? We're gonna get total liability.
Arbitrary number.
We're gonna get total liabilities and owner's equity. But what is my number? And don't just copy your total assets number. Make sure it actually is the same. Add them up. But it should be 418,950. Because if it's not, then you're out of balance and your balance sheet is wrong. All right.
Or you did good things.
Hmm?
Or you did things wrong.
Could be. All right. So the next thing we're going to do is our closing entries for this business. All right, so those will be done as of December 31. So what's our first closing entry? What are we going to do? I'm gonna have to bring a roll of quarters or something like throw y'all change when you get the answer right. No, quarters not motivating. Candy, food,
Which one's the whole-
Twix. It is Halloween, so I have been known to bring candy. For some strange reason, the Jolly Ranchers melt in my office. It's very weird. It's like all the baseball players want Jolly Ranchers, and they like get hot and get like sticky, like syrupy. It's weird. I mean, they stay solid, but they melt on the outside. I don't know. No, they stay in my office in a bucket. But. All right, we're going to debit our revenues. And we're going to credit our expenses because we're trying to zero these things out. We want to make them go away. All right, and then we got to, now you can definitely abbreviate. Salaries and wages. Advertising expense.
Hey, I have a legit question.
Okay.
So on this test, are we allowed to do that piece of paper where you're rolling this down?
Yeah. You're allowed to do that on every test. I wouldn't just like do that to you the first time and say, okay, no more.
Well, like, I didn't know if you were just trying to get us used to your test or not.
Give you what?
I didn't know if you were just trying to get us used to your test.
Oh, nah.
Some teachers do that, or they're like, no, it's like, come on, this.
No. That's not nice. Not to say I wouldn't do that, but I do think some people enjoy torturing you. So just list them all, and then we're going to credit them. Okay, so 168, 21.7, 11.4.
Wait. You skipped one.
I did. Which one did I skip?
So you put salaries in that.
I see what you're saying.
No, you just literally skipped one. So you just missed anything.
I literally skipped a line. 21.7, 11,400. Yeah, that would botch everything up. But I'd figure it out when I got to the bottom and had a line left over. 88.50. Not 8,500. 4,500. 3,000. 22.50. As opposed to whatever it was I was writing there. And 43.50. Now, what's the other piece? I'm sorry. What's the other part to this entry?
Owners.
Yep.
Capital.
So Sarah colon capital will be where we put the difference. Now, how much are we gonna put? Obviously, we gotta make our entry balance. But since we did the financial statements for this problem, what we should come up with is our net income number. Because we're debiting our revenue, crediting our expenses, so the difference should naturally be net income. So 169,450 is what our entry should need. You need to check that, because I mean, if you transposed a number or something, then it's not going to balance. But this should always be either net income or net loss, whichever one you have. If it's net income, you will credit. If it's net loss, you will debit. And then our second entry is to debit capital, credit drawing, to close out that drawing account. Let me make something clear, because this was a confusion yesterday in class. We are not getting rid of our capital account. So you're not going to make any entries that have the balance of your capital account from your trial balance in it. We're adding to capital, and this one will actually take away from capital, because when an owner takes money out, it reduces their equity. So this is the money she has taken out. And so we're going to reduce equity for that money she has removed, and we're increasing equity for the net income. Kind of like your statement of owner's equity does. It increases your capital for net income and decreases your capital for drawing. Does that make sense? All right, so the last thing to do is a post-closing trial balance. This will be the shortest one you'll do. We have had to do 3, unadjusted, adjusted, and this is our post-closing. So beacon signals. And it'll be dated December 31. Okay, y'all, this is literally going to be what is on your trial balance here, lines for cash through capital. Anything after capital on your trial balance is closed. It's zeroed out. You won't have a balance at all. So all you're going to show on there is cash through capital. So I don't know if we even have time to do it, but just make note that it's just cash through capital. No revenues, no expenses, no drawing. We zeroed those out, so they don't have a balance anymore. So post-closing means after closing. Closing zeroes all that stuff out. So all you'll have on there is balance sheet stuff, assets, liabilities, and the capital account. So on your printout here, worksheet, lines 8 through 20 will be the only ones on there. Does that make sense? I can post the answer out there. In your modules, since we had lost 10 minutes technical difficulties.